Hey guys, Paul Kolomeyer here, and today we're going to be taking a look at Jetblue earnings. Jetblue dropped their earnings this morning at 10 a.m. on July 28th, and we're going to be taking a look at them and analyzing them to see just how they did. And so, if you end up enjoying this video, then make sure to drop a like for the YouTube algorithm and subscribe for more content like this. With that out of the way, let's get right into it. So, investors expected that Jetblue was going to lose $1.85 per share this quarter, and JetBlue pulled through and actually lost $2.02 per share, doing worse than analysts expected. This means that 90% of their revenue is gone, and that they only have 10% of the revenue that they had last year. This means that they're significantly lower than they were prior, and means that their stock is probably going to decrease over the course of the next couple of weeks. This is a good time to buy if you are looking to buy. JetBlue also predicted that by Q3 2020 that their revenue would go to 80% down from 90% down, which shows that slowly but surely they're growing. They've been losing about $7.7 million per day for the entirety of Q2, and they said that we can expect that number to stay between 7 and 9 million for the remainder of Q3, but they have $3.4 billion in liquid assets, which means that they can stay going for about 425 days with the current cash that they have. Since many nations right now are working on developing a coronavirus vaccine, and many parts of the world have an easier pandemic going on right now with much fewer people infected, basically every country in the world except for the United States of America. America, yeah! So, because the coronavirus is slowing down and because vaccines are in production, it's very likely that over the course of the next couple of years, maybe by the end of 2021, flight will be back to normal and people will be traveling as much as they did pre-COVID. Because people are so tired of staying indoors right now, and because vaccines are planning to come out by the end of 2020, maybe, just maybe, people will be traveling even more than they did pre-COVID because everybody is itching to travel. What that means is that these companies will actually have an opportunity to grow because they'll have even more demand than ever. This concept applies to the entire industry, from cruise liners to hotels to all airliners. And why this is important is because that means that we can use this concept that we see with JetBlue earnings to invest in any of the following companies. This is why I personally invest in Delta Airlines, because they have the most cash on hand and they can keep going for the longest period of time. This is important if the vaccines aren't as successful as they first expect, and it takes a little longer than to the end of 2020 for the vaccines to be complete. And in that situation, Delta will be the best airline to invest in, which is why I currently have a position in Delta. If you guys enjoyed this video, then make sure to drop a like and subscribe for more content like this. Let me know what your thoughts on the JetBlue earnings are in the comments below. And with all that said, I'll see you next time.